Hi traders, this is Forex James, and in this video we'll be discussing on a very important topic on trading, and it's about our stop losses. Okay, so our stop losses are there to protect the account from major losses. That is the point of using a stop loss, which is to protect your account. Okay, that's why it's called the protective stop. And without a stop, you may just lose a big portion of the account on one losing trade, on a bad losing trade. Okay, and hence we use a stop loss at all times to protect our account from any event like a black swan event or any news or uncertainty that may spike in the market. But however, more often than not, what I see amongst traders is that their stop loss actually hurts their account. Okay, why is that so? Here's an example of a trader with such a condition. So let's take a look at this statement here real quick. It's a snapshot of one of my students' account. So he has 6, 7, 8, 10. It's more than 10, about 10 losses in a row here, and this is about a break even. Okay, and when I look further to investigate, this is what I found. Okay, let's take a look at this euro pound, for example. Use euro pound trade right here. You see, I've drawn it on my charts, and this was the date, and this is the entry point right here. He had projected that price would go up, which indeed he was right. But you see what happened here? Stopped out, and then price went into his favor. This is a typical situation where we need to fix the placement of the stop loss. Okay, and in this case, it's just simply too tight. Looking at this point here, it should be below this point. All right, and that's one way the stop loss will hurt your account with the incorrect placement. Let's take a look at another example here where the stop loss actually protects the account. It was the Aussie dollar here. Okay, right there. So again, the prediction was that price would go up, and it was wrong. He got stopped out here, and this is a good losing trade because price did go further down, and in this case the stop loss actually protected his account from suffering more drawdowns over here. Alright, so in this video I wanted to talk about the correct placement of stop losses. Okay, so I have some tips for you guys on where to place your stop loss correctly. Okay, so we'll start with number 1. Look for the last level barrier or swing point. Let me explain what I mean. So as we like to draw our rectangles for supply and demand, okay, this is how I usually draw my demand zones. And as you can see here, price did react to this demand level. Okay, it made a corrective move up, corrective wave. It's a weak wave. Before it made another push down, and then it reverses. Okay, so if you had placed your stop loss right here, you'd be out. The same case as the euro pound trade which I showed earlier. Okay, so in this case, what do I mean by the last level barrier or the previous swing point? Pay attention to how close this point is to this demand level here. Okay, So whenever you see a level stacked together closely like this, it's always safer to place a stop loss on the further end of the level. Okay, that's point number one. So look out for close areas where the levels are stacked together, and to be on the safer side, place it on the further end. Let's take an example for a short trade. So here's a good example for a short trade. As you can see here, this is a PRZ. Okay, this is basically support turned into resistance. All right, and if someone had just placed a limit order here, a sell limit order, he would probably place the stop loss somewhere here, which he would get stopped out of. And in this case, I want you guys to pay attention to this level here. Okay, this is a strong supply level, which is just slightly above this PRZ here. Had you seen this level, it would be safer to place a stop loss here. All right, so that's number one, the last level barrier or swing point. This is a drop-based drop level, which is pretty strong here. So pay attention to the closest level. And number two is to use the maximum area for price to go for the trade reason to be valid still. Let me explain this. So remember, the definition of a downtrend is lower highs and lower lows. Okay. If price were to go up and surpasses this high, but after that it made this is still valid because this is the point of high it never went through. Okay, so this is still a valid downtrend because it's still making lower highs and lower lows. So on our charts, this is a good example here. Let me remove this. There you go. So if you're looking to enter a short here, let's say you're someone who saw this level here. This is a nice point to go short the market because this was previously support turned into resistance, a swap zone. Okay, but the question is, where is the correct placement of stop? Right? There's a lot of people who would just be placing the stop loss above here, thinking that this level would hold. These are people who are taught to just buy on the pullback or sell on the pullback. Okay, this is what the expectation is. It did come true, however, at this point, because price made a very deep pullback to test out this level here. So in this case here, the correct stop loss placement would either be above this point or above this point. And as you can see, the safest point is above the swing high here, because that would be what I've just explained here. Price is still making a lower low and a lower high. So if you place your stop loss here, you get stopped out. It's a premature stop loss. You get stopped out for the wrong reasons. This is not the right place to place your stop loss. All right, because when your prediction is to the downside and you have a downtrend projected, as long as it's still making lower highs, then it's still valid. So keep that in mind. All right, we'll take a look at another example for buys. Okay, so here's another good example. Let's look at this area here, okay? Price made a move down, it made a higher high, and it looks like trend is going to change to the upside, right? So there'll be pullback traders We're looking at this area here. Oh, you know what? This is a good place to buy a pullback. Some may notice this, and some may just buy at the close of this candle, placing the stop loss over here. In these two cases, both traders would have been stopped out here. Remember, guys, as long as this is making a higher high, it may even retrace further down and make a higher high. Okay, so with that being said, the correct stop loss placement should be beyond this point. Okay, of course, I'm not telling you to use, you don't have to use such a wide stop. So in this case, what I would usually do is look for some sort of price action around here so that I could place my stop loss just below this point. All right, I hope you guys get what I'm saying here. And for number 3 is to use fib extensions for my stop loss placement. Why do I like fibs? It is because they are very objective. Okay, so we don't have to decide whether we're going to be using this level or this level or this level for a stop loss. We simply just draw our fibs because everything is measured out in the move here. Okay, so what do I like to use for my stop loss placement? I like to use the 1.13 and sometimes the 1.27. All right, let me delete this one. Let's just 1.13 for this example. Okay, so what do I mean by this? Let's use this example here. Okay, as you guys can see, price creeping up to the upside here with the previous move down. So this is actually a price section for a continuation. The question is, how far will it pull back to, right? And which level are we gonna take? Is it this one? Is it this one here? Apparently it's the latter, it's the rectangle. Looking at this price, when without looking at hindsight, looking at the right hard edge of the chart, we don't know until that happens, right? Okay, so in this example, I would just simply anticipate a pullback, draw my fibs from this point to the lowest point, and I just place my stop loss here. Okay, 1.13, simple, easy. It leaves no room for guesses. Okay, let's take a look at another example. Here, right, this area here. Price went up, pulled back, right? You could place a stop loss here, or here, or even as we've discussed earlier, for tip number 2, this is the maximum area, this is the point, maximum point. So if price were to do this, right, but it decided to make a lower low compared than this point, this is in fact some sort of a Gartley pattern, and then it rose up, this is still a valid uptrend because essentially this is just a move like that, right? It never surpasses this low here. Okay, so with fibs, I'm simply going to draw my fib retracement and place the stop loss according to the levels. So I'm going to use the swing point here all the way up here, and guess what? It's as simple as that. This is where my stop loss is going to be. Okay, no guesswork. If I get stopped out, that's too bad. That's okay. All right, that's how I use my fibs to place the stop loss. Let's take a look at tip number 4. Be wary of stop hunt zones. What do I mean by this? Okay, this is happening right now on the dollar CAD right here. What do you guys see here? Basically a range that's been tested so many times. This is a very obvious level that could be so easily whipsawed. Alright? There's so many orders sitting down over here. Like if you ask the majority of people, those who are long, they would probably place their stop loss somewhere here. Let's use a red color. And those who are trying to go short, okay, above that wick. Why? Just because that's what they're taught. Okay, conventional technical analysis. All right. So this is the kind of level that you want to be very careful about, because it's so easily manipulated by the big boys. Right. So my tip, if you are in this kind of situation, wait for more price action confirmation. So if this thing is trying to go up, what it usually does is use a green color. What price usually does is that it would wipe you out first. Okay, take all your stops out here, then it goes up. So in this kind of situation, this is what I call a stop hunt zone. Be very careful. Alright, let's take a look at an example that has happened. Let's scroll back here. Okay, here's one. This is another level. It's basically just a range. It's a period of range that's been happening for some time, and it's awaiting a breakout. What happens before that breakout happens? Eventually, a stop hunt. Okay, so where do we put our stop losses? The answer is it has to be far enough from manipulation zone. Right there, if you're going short, right? So that when price actually spikes up, your stop loss stays safe. Okay, guys, so that's number 4, to be careful when you're trading around stop hunt zones. Right, so those are the 4 tips I can give you today, and I'll leave you with one more tip here, which is what I do for all my trades. The first thing I look for is the correct level of stop loss, and then I would adjust the entry so that I could still get a good reward to risk trade. Alright, so remember, look for your stop losses first. Right? Stop trying to squeeze your stop losses, and if you keep doing that, you'll eventually be getting this similar results here. Okay? So this is either due to over trading or just simply incorrect placement of stop loss, because believe it or not, the majority of you guys predict the price correctly more often than not. But the timing is always often wrong and manipulated by the big boys. Okay guys, so stay safe out there. Remember to always use stop loss and place it correctly according to what the market tells you. Take care.